Hey Zingers, it's Dan Leach, and I have a fantastic guest for you today. It's Steve Schofstall, Director, ETF Product Management for Sprott Asset Management USA. It is so great to be with you, Steve.
Thanks for having me here, Dan.
Yeah, the pleasure and honor is all mine. Let's start if you can give us an overview of your company.
Yeah, so Sprott is a global portfolio manager. We're headquartered out of Canada, but we have several offices in the United States, about $33 billion in assets. Our main focus is on precious metals and critical materials, both miners and also physical commodities. As it relates to those two categories, of the 33 billion or so that we have in assets, about 28 billion or so is dedicated to our exchange listed products. So those are like physical trusts that hold physical commodities, or our ETFs listed in the United States, which generally provide exposure to miners of different commodities, whether it's uranium, silver, gold, lithium, anything that pertains to precious metals and critical materials.
I love it. Let's talk about silver. I know silver has a dual role as a currency and a metal used for clean energy. Why is that a unique opportunity right now?
Well, I think it is a duality, which makes it different than what we see perhaps with gold or other precious metals, right? So when you think historically about silver, it was primarily used as a monetary tool. As civilization has evolved, and in particular, even in the last several years, we're actually seeing the industrial uses of silver are increasing significantly. So we're at a point now that as of the end of 2023, we had about 55% of silver was actually used for industrial purposes. So all told, there's about 10,000 different uses for silver. It's the most widely used commodity behind oil. There's a lot of uses as it relates to electronics. It is the most conductive metal on Earth, so we do see it used a lot in electronics. We see it in computer chips, so semiconductor chips, and becoming more increasingly important as it relates to artificial intelligence, which is a very high growth sector that we're seeing emerge here within the last 12 to 18 months. And when we start to look at another high growth sector, we actually see it used in the control rods of nuclear reactors. So nuclear energy is also another high growth area and theme that we're starting to see a lot of interest in and a lot of investment flow into. But if we look at the amount of silver that's actually being used in industrial uses, last year in 2023, it increased about 11%, up to about 654 million ounces. Numbers for 2024 aren't out yet, but indications are that will increase again up to about 711 million ounces just used for industrial uses. So not anything to do with that, historical precious metal allocation that we see. Among the key growth drivers that we see, I did mention AI, I mentioned nuclear energy, and it also has medical purposes, but we see it being used a lot in power grids and 5G networks. The power grid is something that's getting increasing amount of attention as we start to see artificial intelligence is consuming more and more energy. We're seeing infrastructure build outs on a global perspective, and then also how that relates to the transition to cleaner energy, which most countries have now signed on to decreasing carbon emissions. It's becoming very important in that space as well. So as we continue to progress here throughout the next several decades, we expect the infrastructure build out and the transition to cleaner energy to really increase its uses. And as it relates to energy transition, we have the nuclear component, but we also have the solar energy component. So silver is very important as it relates to solar panels. It's actually gets applied as a paste and used to turn the sun's energy into something that we can use. We've actually seen the amount of silver demand increase from about 6% back in 2015 up to about 16% as it relates just to solar demand. So that's also a large growth area that we see. And part of the reason that we see that growth is, one, we're increasing our reliance on solar energy. And two, as we're moving through and getting technological advances as the energy transition progresses, we're actually seeing new designs of solar panels take shape, and oftentimes those new panels are using more silver than older panels.
Yeah, and that's a perfect segue to my next question. Do you believe that supply is keeping pace with demand for silver right now?
It's one of those issues that we're starting to see actually creep up in a lot of commodities. It's not just with silver. We do see from a silver perspective that the supply has been relatively flat for the last 9 or 10 years or so. It's actually decreased about 3%. So that's something that we expect to persist. And there's a few drivers actually with that as it relates to silver. So one is, if we look back at the 2010s, that decade was a decade where we saw underinvestment across the mining sector. So that's one of the issues that we have. Another issue that we have with increasing supply quickly is that silver is often mined as a byproduct metal. So because of that, there may be, a zinc or a lead or an iron mine that is the primary goal for a miner to extract, and then silver comes along as a byproduct. The price of silver might not really have an impact on the mining decisions, as that's not the primary goal of each individual mine. So we see that byproduct nature of silver also hampering supply in the coming years as well.
Well, let's talk about the investment side. You explained obviously all these amazing uses that silver has right now, right behind oil as the number two commodity. Why should an investor consider silver and silver miners as an opportunity?
So I'd say first and foremost, it can add diversification to an investor portfolio, and what that can do is help reduce volatility in a well-diversified portfolio in periods of stress or volatility in the market. If you look at the correlation to physical silver relative to other asset classes, you'd see things like the S&P 500 and bonds. There's actually a low correlation. When you start looking at things like the US dollar, we actually have a negative correlation with physical silver relative to the US dollar. So there's that diversification that you can get. Also, given its industrial uses and the growth that we're seeing in that area, it starts to, I don't want to say completely move out of the precious metal space, because that is a very important part of what silver is, but its reliance on industrial uses is increasing. And with that, it can potentially add some growth to a portfolio. If you look at miners in particular, if you're looking at a miner that has at least 50% of its revenue coming from mining silver, they have an all-in sustaining cost of mining. It's a little bit over $17 per ounce. Where we sit today, silver is up around $30 per ounce. So it's at this point in time, it's a very profitable for silver miners to mine silver. And from a silver miner perspective, particularly those pure play miners, that's something that we see continuing to play out into the near term. Historically, if you go back to the turn of the century, silver was about a little less than $5 an ounce. And as I said, we're up around 30 today. Through the last 20 to 25 years or so, it's actually averaged an annual return of about 7%. And again, a lot of that is on the back of the increasing industrial demand that we have. Additionally, depending where investors believe we are in the market cycle, we've seen that historically, if we look at the last three periods of the Fed loosening or lowering rates and with a looser monetary policy, we do see that what we've noticed over those last three cycles is that that has been a leading indicator for higher silver prices if we go back for the first 25 years or so of this century. So that's an aspect that investors are starting to understand and see the growth potential in periods of looser monetary policy, if that's the route that we end up going. Additionally, silver tends to do well, as does gold and other precious metals, in periods of geopolitical risks and currency debasement. When we see periods of inflation, all those periods tend to be beneficial for precious metals, and silver is no different from that regard. So that, combined with the industrial uses, that we think it sets investors up for the diversification with some potential growth benefits as well.
I love it. And Steve, let's talk about the uniqueness of Sprott. What makes the Sprott silver miners and physical silver ETF different?
Yeah, so we started developing this fund with NASDAQ last year. So it's been many months in progress, and as I mentioned at the top, our background really is in the metals and mining space. And so what we do whenever we go through a product development phase is we look at the market and we try to marry our background with what we think the potential opportunities are. And when we review the investment landscape, if we think there's an opportunity there to provide a differentiated product that we feel increases investor outcome, that's an area that we target. And so when we went through that process for silver, for this fund in particular, we saw that there was an opportunity to provide a fund that was focused on pure play miners. So the way we classify pure play miners, it's those miners that have at least 50% of their revenue or assets tied to mining silver or exploration or development type processes. But we also wanted to add a physical silver component to the portfolio, which is something that none of the other ETF investment options have done out there. So the physical silver component will, at each semi-annual rebalance, make up about 17 to 18% of the underlying portfolio. It will fluctuate between rebalances. And then we have a smaller bucket within the portfolio to add some liquidity where we do decrease the pure play nature of some of the underlying components to a 25 to 50% revenue test. That's limited to a 15% allocation. The rest is going to be in those predominantly 50% or greater silver miners. And the reason why that's important is if you look at the way the market's set up, 72% of the silver that's mined is actually mined as a byproduct. So it's mined, in conjunction with pulling other metals out of the ground. And if you're looking to invest in miners that maybe have only, a 5 or 10% of their revenue being derived from silver, your investment can be very much influenced by many other metals, whether it's lead or zinc or copper, because of that byproduct nature. So that's one reason why we wanted to go with the pure play approach and think investors may benefit from that. Another is if you look at the 10 largest silver producers in the world, 0 of those actually have silver as their primary revenue source. So it is a byproduct in the case of the 10 largest producers. So we think that by zeroing in on those pure play miners that have their mines that are tied to mining silver, as the underlying price of silver increases, we expect those miners to benefit relative to the diversified miners that we see across the space. As a result, we would expect to see the profitability increase as well in those periods.
Oh, exciting times for as well. And Steve Schofstall, the director, ETF product management for Sprott Asset Management US. That was an absolutely fascinating conversation. Steve, thanks so much for joining me today.
It's great to be here. Thanks, Dan.